The Bulls came to play today, guys, and no, I'm not talking about the Chicago Bulls. Come on, they're not even in the playoffs right now, but the Bulls in the stock market, and I'm not throwing shade. If you're a Bulls fan, I'm a Sixers fan. We might lose to the Celtics. We'll see how it goes, guys, but overall, the Bulls in the stock market came to play. We had the Russell up 2.4% today. We had the S&P 500 up 1.8, the Dow went up 1.6, and we had the NASDAQ up over 2% as the VIX got destroyed, down over 14% on the day. So we're not going to focus too much on the markets in general today, but we are going to go over 7 stocks that I'm looking at right now, most of which are on the higher growth side. I want to go over the charts, talk about where I'm looking to buy, sell, do all that good stuff. So if y'all find value, all I ask is to hit that like button and to subscribe. And with that being said, cheers. Let's take a sip of our water. Let me actually do that myself, guys. Stay hydrated out there. And with that being said, let's dive on into the video. So the first stock I want to go over today, guys, is Coinbase, ticker symbol COIN. And I'm not sure if you noticed, but there were a handful of stocks, and mind you, a lot of stocks did well today, but there were a handful of stocks, at least on my watch list, that did extraordinarily well. I'm talking well over 10%, and Coinbase is one of those stocks. This thing went up over 18% today, up over $9, as the company just reported earnings yesterday, I believe, after the bell. Let's see what they did. If we could come down a little bit here and see what they did. So they lost 34 cents on the quarter, which beat the loss of $1.36 expected. So that's really good. And they beat on revenue by a long shot, $772 million versus $649 million. So no doubt in my eyes, guys, a lot of the big move today has to do with that beat on revenue. They beat by well over $100 million. It came in $100 million over the estimate. That's really good. And Q1 total transaction revenue increased 16% quarter over quarter to $375 million. And consumer transaction revenue was $352 million in Q1, up 14% quarter over quarter. And let me see here. Did they provide any guidance? So it looks like here total revenue grew 23% quarter over quarter, and net revenue grew 22% quarter over quarter. All right, pretty good. Not seeing anything here on guidance though, but overall, guys, we got ourselves, Coinbase got itself, not me, not you, but Coinbase did. It got itself into a hole down to about $47, and that was just after it was at $85. Think about that, guys. Back in the end of March, Coinbase stock was at $85. It got all the way down just a couple of days ago to $47. Pretty much, not exactly a cut in half, but it almost cut in half. 44% decline. Now it's starting to rebound after we got the earnings. Now the cat's out of the bag. They beat EPS revenue. The way I look at it is they're taking a sigh of relief. People out there that are investing in Coinbase, trading it, watching it from the sidelines, and they're starting to come back in because there was a lot of fear, no doubt about it, around this earnings report. Was it going to be a flop? Were they going to miss? And, it surprised Wall Street, and that's why we're seeing that massive run. Now, is it worth trading? Not quite yet, in my personal opinion. And you may be like, Stas, what the heck? It's up 18%. Why don't you just buy it? Well, because we are approaching a major resistance right now. You guys can see on the 4-hour chart, we're still technically at a lower high. Do you guys not see that here? We have one high right here, which technically is a lower high right now. We'll see if we break through it. We have another one right here and another one right here. So you guys see we're still in this downtrend. We have to wait and see if we can break the mid-60s, right? If Coinbase can successfully break out of $63, $65, that could be a point where we could get a huge breakout, but we're not there yet. The last thing I would want to do, and I would want you guys to do, even though I'm not telling you what to do, the last thing I would want to happen to us is we FOMO into this and it ends up being a bull trap, and then it dumps back to the low 50s, maybe back into the 40s. That's the last thing I would want to happen. So for that reason, I'm going to wait and see if we break out of this trend line, out of the mid-60s, and from there, okay, maybe we get even more upside towards that $70 to $73 level. That was resistance in the middle of April. Maybe we break out of there. So my alerts are set at $63. I have another one at 73 and another one at 220. Oh my God, what the heck? When did I set that alert? 2 years ago? Let me just cancel that. I doubt it ever goes to, well, I'm not going to say it never goes to 220 again, but for now, I doubt it does anytime soon. But we'll see, guys. Coinbase did very, very well today, and same with DraftKings, guys. Oh my goodness. DraftKings today went up over 15%. And no doubt about it, guys, even though it's crushing it right now, it's pretty overbought, right? Just like what we saw with Coinbase, it's overbought, and I'm not going to FOMO into it. But if this thing sees the dust settle, if we come down lower 20s, 21, $20 a share, 22, maybe we retest that 50 SMA, also the high from back in the middle of February. That could be a point where we enter into it. Well, I enter into it. I'm not telling you guys what to do. Again, I'm not a financial advisor, but overall, DraftKings is crushing it. And mind you, we called this out a couple of weeks ago, and it was at 18, 19 bucks when it was in this channel right here. Well, we broke out of that channel. Now we're starting to really break out. We actually took out the highs from the middle of February. We took those highs out, I believe, recently. So now we're at, where are we? 25 bucks. That was the high from probably a year ago, maybe even more than that. Yeah, probably over a year ago. Let me see the 3-year chart. 25 bucks. That was the high back in February of 2022. So if we break that point, we could be going 30 bucks, maybe even higher. So DraftKings looks really good from a technical standpoint, although it is overbought. We have to see it pull back a little bit, in my opinion. Then it could open up as a decent play. So let me see what they reported. I forget, actually, yeah, they didn't put their earnings here for some reason, but it looks like here we're seeing, CEO says, we're seeing really strong trends after Q1 beat. It looks like they raised guidance, which is great. So let's see what other stocks are listed on here that are moving. It looks like here, oh yeah, Carvana had a huge move today. I think Pac West did as well. Even though those stocks are not on the list for the for this video, let's take a quick glance at them. Why not? I think Carvana went up a ton today. I think a lot, right? Yeah, 24% move for Carvana today. I think earlier it was up even more. Let me pull the 5-day up and see what that's looking like. So this squeezed after the bell, after earnings came out yesterday, and at one point it was up 56%. That is a very big move for Carvana. Let me see what was the other one? Crap, I think Lyft went up as well, even though that was not the other one. Actually, no, Lyft went down. Oh my God, 20%. Okay, yeah, never mind. It did not go up. It went down 20%. And what was the other one? Crap, Pac West, of course. That's the regional bank that might go under next. This went up 82%. Oh my God, 82% on the day. Talk about craziness, guys. So let's talk about the next stock that's actually on my list for this video. It is LYV Live Nation, which went up 15% today. This is another one that moved crazy after earnings. So they ended up doing, let me see here, negative 25 cents versus the 41-cent estimate expected. So they missed on EPS, but they destroyed revenue. And I mean, they destroyed revenue. 3.13 billion versus 2.28 billion expected. That is an insane beat. I mean, what analysts are covering the stock? What the heck? 3.13 billion versus the 2.28 billion. I mean, come on. And it looks like here they somebody adjusted their price target, raised it up from 110, or rather from 105 to 110. They're maintaining a buy rating. I'm not sure who exactly that is, but overall, guys, this stock is completely breaking out on a huge beat on revenue. I mean, a huge beat. We're talking a 40% beat on revenue. Now it's breaking out of the moving averages for the first time in a couple of weeks. And yes, it is overbought, but if it does consolidate a little bit, maybe it chops around here at 73, 75 for a little bit, then it starts making a move towards the highs from the beginning of February. Then we take those highs out. In my eyes, guys, the way I look at it is that would be a distinct spot of for a reversal here on Live Nation, and it could be going up a lot more from that point. So I'm sure you guys saw Shopify. This company just, oh my God, they destroyed earnings, guys. Their stock's completely on fire. Yesterday, it went up, I think, 15% on the day. Actually, no, who am I kidding? It was up more like 20%. And today it went up another 8%. Now it's up over 30% from where it was before the earnings. And it's completely breaking out of the wedge here on the 4-hour chart, which, mind you, we called this out a couple of days ago before it actually played out. And I'm not telling you guys that I'm some kind of god or anything like that, but I do make some decent call outs, at least in my opinion, here on the channel. Let me know if you disagree down below. I mean, feel free to disagree. It's all right. I'm not gonna ban you or block you like some other weird YouTubers out there. But yeah, I think this was a good call out on my part. We have the inverse head and shoulders playing out. We're completely breaking out of that wedge. And let me pull the live news up. Let me see if we can see their earnings here. It looks like they did adjusted EPS of $0.01 versus the loss of 4 cents. Okay, they beat on revenue as well. On top of that, adjusted EPS beat. Revenue came in at 1.51 billion versus 1.43 billion expected. So this one, like Coinbase and DraftKings, is overbought. We have to wait for the pullback, but when we get it, I think that could open up a decent entry depending on how the price action looks. So make sure to subscribe because we'll do a lot more follow-ups on these stocks, guys. And by the way, if you have not gone up to 15 stocks yet from Moomoo, it is free money. Use that link down below. Once you guys open up an account, you get 1 free share of stock, and if you deposit at least $100, you get 4 more stocks, totaling 5 stocks. And if you deposit at least $1,000, are you ready for this, guys? You get 10 more stocks, totaling 15 free stocks. And of course, that link helps out the channel. I appreciate you guys as always. And if you don't like Moomoo, you can simply take out all your money. You keep the free stocks on top of your deposits, and well, you get money. It also helps out the channel. I appreciate you guys again as always. And with that being said, let's talk about a couple more before we wrap up this video. So Foot Locker is looking quite interesting. Although this is not the most high growth stock known out there, it is still a decent company in my opinion, and their stock did very well today when I'm making this video. It went up over 4%, and we're pretty much on the verge of breaking out, at least testing the top of the wedge and maybe breaking out. We'll see. If we do start moving above, let's say $42.50, $43, there can be a big move to the upside on Foot Locker, and we can see something similar occur to what we saw with Shopify. Again, let me pull that up and show you guys. We had the wedge. We completely broke out. Now we're mooning. This could also happen to Foot Locker, but mind you, we have earnings coming up on Foot Locker, I believe, in the next couple of days. When the heck are these earnings? Actually, no, in 2 weeks from today. Not next Friday, but the Friday after that on the 19th of May. They're reporting in the morning, so we probably will see some choppiness before that, but definitely some direction after the earnings. So the next stock is CCL, which is Carnival Cruise Line. This is also looking like it's breaking out. It's starting to, and this is, you know, what Shopify started to look like, and then Shopify went ballistic like we saw. Now this chart is looking like Shopify's did pretty much before it broke out, and you know, it's a little bit ahead. CCL is a little bit ahead of the breakout, you know, compared to Foot Locker, which is not really breaking out yet, but it could be on the verge of breaking out at some point next week. But overall, CCL is starting to break out. Let's pull that up and I'll show you guys. And now we're above the moving averages, we're above the wedge, and I think if we start moving towards the highs from the end of March, early mid-April, which is right around 1030, if we start moving there and we break out of 1030, that's where the big move is going to come on CCL. I think at that point we could start moving maybe back towards $12, $11.50 at least, maybe even higher than that. So Carnival Cruise Line looks pretty good technically. And the last one, guys, is good old AMD, which they reported numbers a couple of days ago, and their stock did not like the numbers. It went down and went all the way down to about $80, which ended up being a nice dip buy. A lot of traders came in on that for sure, and we talked about it here. I didn't buy it personally. I'm not even gonna, you know, sugarcoat it and BS you guys and be like, oh yeah, I bought it at the bottom. I didn't buy it, but we did talk about it here. Now it ran all the way up to the top of the channel. Now's the moment of truth for the bulls. Are we going to see something similar happen to what we saw before the earnings, where we almost broke out, then we got rejected and boom, dumped about $10? Or are we going to now plow through $90, run through 92.50, which is right by the 180 SMA here on the 4-hour chart, right where my alert's at, right? What are we going to do? Hopefully we break out. I mean, I'm not in this, so I don't have a bias per se. I don't have money at risk. But if we do start moving past 92.50, what I can tell you for sure is I'm probably going to get in this on a trade. I think there will be a lot of momentum from that point, probably back towards the low hundreds, maybe even higher than that. So AMD, CCL, Foot Locker, Shopify, LYV, Live Nation, DraftKings, and Coinbase. These are 7 stocks I'm looking at right now. Let me know your thoughts in the comments. Hit that like button. Feel free to subscribe. And by the way, I have a second channel called Stas Talks Money, which I think we're at 362 subscribers. If we get 1,000, when we get 1,000, I'm going to be doing a $100 giveaway to a random person out there that subscribes. So if you want to be a part of that giveaway, all you have to do literally is subscribe. And once we hit 1,000 subs, I'm going to make a video, and anybody that comments on that video, and I'll do a couple videos, we'll do it over the course of a couple days so you guys don't miss it. I'm going to pick one person from the comments and literally Venmo them $100, or Cash App, or PayPal, whatever you guys want. I'll even mail you some cash if you really want to, guys. So yeah, make sure to subscribe. Second channel, Stas Talks Money, link down below. And don't forget to also get up to 15 stocks from Moomoo and 12 stocks from Webull. Check out the Patreon as well while you're at it. Again, all those are down below. And with that being said, cheers, guys. I'll catch you in the next one.